Yeah, turn.
What do you want us? Okay.
Pick your spot.
Oh, I'll have to fall asleep straight up.
It's all right. We're gonna be good. All
Here we go.
right. Well, I've invited everybody to contract to close. This is the first event of many that I'm going to be having. And it's really an intro for new buyers as well as sellers. You know, I don't think anybody knows really how to buy a house. I mean, even in certain aspects, I still find that there's lots of pieces that I don't know about, which you'll find that as we go through. I've got some questions and we'll go through there. So thanks everybody for coming and keep going. All right, introductions. Prime Lending, we got Jeremy Noyce over here. He's been coming out since I started. He's been doing this how long, Jeremy?
A long time, probably longer than you know. I started banking and finance in '97, and mortgages probably the last 15 years.
Okay, all right. Tumbleweed Inspections, we got Gentry,
It's me.
Giles.
Giles.
Yeah.
Yeah.
Okay,
Goodness.
I'm telling you.
We're friends.
We've been friends on
Yeah.
Facebook. And we talked about his Facebook name, which is not
My real name.
Giles.
You're right. You got it, man.
So not Giff, Jim. That's how I'm gonna remember.
There you go. That's true.
Okay, and then Lisa Lake with Goosehead Insurance. She's again another one of my huge supporters, very knowledgeable, and just huge supporter, and I really appreciate her. And then for Keller Williams, I'm Stephen Rosas. I've been doing this 10 months. I don't want to toot my own horn, but I have learned so much from being here at Keller Williams. I started at a time when they had a coaching program. I started a coaching program, and I spent a lot of time here, probably about at least 2 hours a week and up to 6, learning different things, and that's like every single week. And so that's kind of what prompted me to have this event, to have this small course, which will grow. All right. Well, I think everybody in here has an idea, maybe not in this corner, but y'all guys, we kind of know what a hot market is, what a neutral market is, and everything like that. But I wanted to kind of lay it out there in the simplest term. You know, we were having a scorcher, and everybody heard about how crazy the houses were selling. You couldn't keep a house on. We're seeing a cooling trend, but as you'll see, you know, in a buyer's market, we're above 6 months of inventory on the market for homes. Neutral market, we got about 6 months. I'm sorry, buyers above. Neutral about, and then seller's market, where we're at, is below 6 months of inventory. Right now, can anybody guess what we've got as far as months of inventory for real estate? Any of the lenders or
60 days.
60? Well, that's about what we started at when it was crazy. Right now, we're at about 3.4. And it's between 3.2 and 3.6. So that's well into a buyer's market still. We've got probably several months, but you know, that's about where we're at. We're experiencing just about 3 months of inventory. And the good news is there's always inventory coming back on the market. Jamie, we just got her house sold and bought, and I allowed one of my partners, Chloe, to take on the buying side, and I'm sure they worked really hard.
Yeah.
Yeah, because I heard them they were going to go into contract and then they were out and, you know, finally got one. But yeah, so it's still a lot of work in the real estate industry right now. Right, okay, and then that brings us to pre-approval and finance. You know a little bit of the market, but Jeremy is the expert on that. I've got a few questions, and so you know I'm just going to go ahead and start with the first corner where it says in the title pre-approval versus pre-qual. What does that mean? What do they mean?
Well, so pre-approval, so pre-qual, like if we pull credit as a mortgage company, well, let me back up. When you go to buy a home, of course, the seller is going to require almost always at this time a pre-approval or pre-qual letter of some sort.
Right.
You know that you've gone to a mortgage company, they verify credit, certain other financial pieces of information. And so a pre-qual could be classified more as just kind of a high level pulled credit, kind of gotten some basic financial information and determined that this guy's or gal is probably qualifiable based on what we've been provided. Pre-approval would be much more in depth, sometimes even through the entire underwriting process, where we really dig in a lot deeper, verify documentation, things like that, and it's more solid,
Right.
in a sense, to give the assurance to the seller that you're in good order, because how hot the market is right now, really sellers want that assurance because there's a million other people in line ready to buy, and why go with you if you're just kind of it's kind of iffy.
Yeah.
So,
Yeah, exactly. All right. Yeah. Any questions about that? Your pre-qual and your pre-approval are two different things, and your pre-approval, I believe, is after they've done the deep dig right into it and like that. That'll come later. Am I correct? Yeah. Okay, and then so we're gonna go. I'm gonna go ahead and start right at credit. You know, and how low can credit be to buy and finance, and what kind of where's your sweet spot?
So there's a lot of different programs out there. I've talked to a lot of guys, and it sounds like you guys already know some of this stuff. So speak up if you have anything to say. So depending on the financial institution you go to, there's a lot of different programs available, and I'll just give a real high-level overview of how the mortgage industry works. This is how I try to explain it. I don't want to use the word dumb it down, but that's
Yeah, like we're five.
so.
Barney style.
Yeah, give it to me like we're five.
Banks, we're essentially using money from other entities, which would be FHA, Federal Housing Administration, USDA in some cases, or Fannie Mae, Freddie Mac, if we're doing a conventional mortgage. And we're really using money from those agencies to loan to people. And so we have to make sure, in order to use that money and keep the flow of money going out, we have to use that money to keep going out because we'll run out of money if we don't. Like those entities have essentially almost endless supply of funds because of a lot of reasons. But we have to make sure that whoever we're qualifying for a mortgage or pre-approving fit within their parameters and their guidelines. And as it relates to credit income. So credit, Fannie Mae, Freddie Mac, there's actually just a recent change with Fannie. They're going down as low as a 600 FICO now. It's been 620 for many, many years. So conventional mortgages, 620 has kind of been, by and large, the minimum threshold and above. Now it's down as low as 600, but we still find that there's some difficulty getting people qualified even for a conventional mortgage if you're in that lower range. So a lot of times in the lower range, we will lean more heavily on a government-backed program like FHA or VA or USDA. And those FICO scores, by and large, can go, most institutions will go as low as 80. A lot of banks like to do mortgages for people that are a little stronger, 600, 620, it depends on the bank. Some banks, even though FHA might fund that money to the bank might say, well, we really want to be a little more conservative and do just 620 and above or 600 and above because we don't really want to take the risk. But it varies from one bank to the next. I think they could be about the same. Most local lenders at Amarillo are about the same criteria by and large. So you can now be up below 580. There's ability to get financing out there, but I tell people to be ready because if most banks aren't going to loan you, if you're under 580, the ones that will are probably going to charge you pretty heavily to do it. And so you pay for it in some regards. So
Right.
This makes sense.
Yeah.
Yes, ma'am.
It's a rule still that you have to be self-employed for 2 years.
Yes and no. Primarily, yes. There are certain situations where, let's say you work for, you're a truck driver, work for a trucking company for years and years, and you decide to go out and do your own truck. At least a year, preferably 2 years, because that gives banks a longer history to determine what kind of income you're making, because when you're self-employed, it's all over the place. But if you're new, let's say you're a mechanic, and you decide to go do nails for a living, you're probably going to need 2 years. You know.
How did you know I was a truck driver?
Yeah, I just.
It's the smell.
His face gets all red.
It's the smell.
All right. Well, you've kind of gone over programs. Do you have any? You said things were changing with Freddie and Fannie. Are there any new programs coming up that are exciting, or are there older ones that people have underused that maybe?
Well, celebrity. There's not, that I can sit here and think about it. There's not like any new whiz bang type program that I can think about other than the reduction in FICO criteria with Fannie. But that's really the same animal we've been always
Right.
had. It's just a little different. Looks a little different now. Has a different haircut, so to speak.
Okay.
There's a lot of programs out there. All of those programs require down payment in some regards, unless it's a USDA or VA loan, which is a small segment of people that utilizes those programs. But most programs require down payment. There are agencies in the state of Texas, and even beyond that, every state has usually state agencies that will help fund down payment if you meet certain criteria, credit and income, things like that. And we utilize those a lot. A lot of lenders do. There's some other programs that a lot of people don't know about, like rehab renovation type programs. Those are not as popular, but because a lot of people don't know that they're out there, so there are the fixer-upper type programs.
Right. Okay.
All
All right. Well, I appreciate it. I know I'm giving you a lot. Do you have a word of advice or caution for the upcoming, the upcoming months and in the market if you want to buy or want to sell?
Well, the biggest thing is if you're thinking about buying, you need to be qualified, because as a real estate agent, you guys know that like sellers nobody wants to waste time on someone who's not qualifiable. just because there's so many people in line to buy their homes. So do it sooner rather than later. Get with a financial institution and get qualified, or get direction on what is going to need to take place to be qualified. We have a great number of local financial institutions, several in this room. I would highly recommend you try to stay local if you can, just because you have that ability to go in and see them, meet face to face, get the advice that you need. There's always a cheaper deal online, but that's not always the best deal, because you're going to be calling 1-800-GO mortgage, and it's just not the same.
Well, yeah, that on a offer doesn't look very good either.
Well, and that's a good point. A lot of times, sellers or other real estate agents, particularly on the seller side, have a lot of reluctance to accept those type of offers, just because there's a greater potential for a train wreck later,
Right.
and that's the reality of it. Just because what I find, I have a lot of people call me after they've been dealing with those type of institutions, frustrated because they get to the tail end of the process and then it blows up, and then we have to try to fix it. And fortunately, in a lot of cases we can, but there's sometimes that we can't, and it should never have gotten to that point in the first place.
Right,
So,
right. All right. Well, thank you, Jeremy.
Yep.
Jeremy from Prime Lending, my man. All right. Now, this is sort of my portion, and I've got all of these in your little folder here. You know, I don't expect you to take all these out and really get a good look at them, because there's a lot. There's a lot in every single one of these, and they're in the back. In these contracts. So I'm just going to kind of go through and tell you about what each one has in it. Again, I'm going to miss a lot of important parts. You know, and if you really, you know, want to look at it, again, these are all samples. You can take these home and read them all the way through. And so that way, if you're moving or selling in the future, you already know what's in it. Oh, no. I don't have my IBS. Is it?
Should be the last page.
All right. This baby right here tells you, literally give you definitions of what is done in real estate between each party. You know, and it starts out, you can read the first line, we'll read the first couple, and then I'll let you kind of go on your own. But it says a broker, and it says what he does is responsible for brokerage activities, including acts performed by sales agents sponsored by the broker. So essentially, Keller Williams is a brokerage, still alongside a brokerage. My broker is Albert Harris. He has his own office, and he is the overseer and sponsors all of the agents in Keller Williams Amarillo. And that's what he does. And, you know, again, it goes down in his brokerage. You know, they're here to protect you, and they're here to protect the agent. And then it says, you know, your sales agent must be sponsored by a broker and work with clients on behalf of the broker. That's what I do. I work on behalf of my broker, and I sell these houses, and I pay a bit of my commission every commission till I cap, and you know, I pay for it. I pay for this nice room that they let me use. I pay for the coffee area. I pay for prints and marketing and everything like that through them. And then of course the most important part is the E&O insurance that protects me in case I make a mistake, which they cover. Okay. And then, like I said, read that. It's really good. It tells you every little bit. If you want to be expert, read these contracts, because everything's in here. We're gonna go next to The listing agreement and buyer's rep. Okay, I've got these two here. There's your buyer's representation. And then here's your listing agreement. Your buyer's representation, really short and sweet, made by Keller Williams because, I mean, we don't really have a Texas Realtor copy that they make, but this is ours. Put all the information in. It says from date to date when we're going to be looking for a house. At the end has your signature and ours, and really goes into depth about what the buyer is going to do for you throughout this transaction. Which, you know, there's always more. There's always more information. This is the basics, and so I want y'all to have a little bit under your belt. Then we've got the exclusive right to sell. This is the one I like the most. This is I fancy myself a seller's agent, and so this is the one I go in with, and it pretty much takes down the seller's. You talk about signing away your soul. This has all of it on there. Has your address, the Latin of your address, everything in here, and then of course on the second page, it talks about your terms, which are your listing price up at the top, your broker's compensation, which is negotiable. I would say if you have a realtor that dips too low behind what you say, you know, unless there's certain circumstances, of course, there's always certain circumstances, but if you can win a negotiation against your realtor, I'd be worried. That's all I'm saying. if you can win on that one, I'd be worried. All right, let me see. And again, this one starts going into your protection and all your house and everything like that. Again, this one's one that you want to read. If you ever see the listing agreement, read through it carefully, because this again signs away your home that you have. Seller's disclosure. After you sign your listing agreement, you'll sign a seller's disclosure that tells you about all the great stuff that's in your house, your pool, your fancy fixtures, built-in trash compactor, your utility room, and anything that may be a little skewed about it. And that goes on here. We load it up into the MLS, and the other agent can read it, and they can kind of make an assessment based off of that of how much they want your house. And especially right now, it's not completely necessary, and I don't want to say that, you know, lightly. It is very necessary, but we've got a lot of buyers that will put money on a house without looking at this. But if they have this to read, they're gonna make a decision a lot quicker. And then once you put your house on the market, you've got your stuff on MLS. We're getting offers, and you're getting the 1 to 4 family residential agreement. This again has your information, has the information of your prospective buyers, has the property that they want to buy, which is your property, has, you know, any exclusions that have been in the MLS that you've listed, and then right here it has their sell price. Sometimes they will send you in a contract that is either below the sell price, above the sell price. Right now, you know, you're hoping that this number's above, because that's when you're putting in an offer, and especially right now, you're having a hard time winning an offer below sell price. And again, read through this, because it's got stuff about your leases. If you've got security cameras, you've got a propane tank that you pay money for, that's all going to be in here, and that's what's going to be discussed in the contract. And finally, recently I had an experience with a agent, and we were both on the deal. We at the beginning had mentioned that the seller was open to painting the ceiling. He left that out of the 1 to 4 family contract. He left that out of the repairs addendum. We negotiated repairs they were happy with. Found out later that we weren't doing the ceiling. He was asking about when that was going to be done. I said the seller decided not to paint the ceiling. You know, we paid for these other things. It wasn't in any of the contracts. We don't know what to tell you. He's very upset because he's got to tell his client that he didn't do his due diligence by putting in a big piece of why they bought. I wouldn't say it's a big piece of why they bought the house, but it was an incentive. And if it was an important incentive, it has to be in the contract. It has to be in the contract. Okay. Does anybody have questions about those contracts? Again, I know I like very briefly skimmed over them. If you get to reading and you see something in there and you want to ask me a question, I think all y'all can get a hold of me and ask me. If you got any questions right now. Okay. All right. Well, I had two sponsors from a title company. One couldn't make it for office circumstances, and the other one texted me last night and told me that her husband, I don't know if she wants to tell everybody, but she told me, so I guess it's not that big deal, but had COVID, so they're quarantining, and thankfully for our health. And so I'm going to do my best to explain escrow to you. Okay, one of my biggest questions was, what is escrow? So because I feel like I've heard escrow, and even as an agent, I can't pin down what escrow is. And so I took the definition straight from the internet, and I'm gonna go ahead and read it to you right now. Because an escrow is a contractual agreement in which a third party, which would be your lawyer's title, or Lighthouse, or Chicago, or any of those, receives and disperses money or property for the primary transacting parties, with the disbursement dependent on conditions agreed to by the transacting parties. So what you do is you're essentially signing a contract allowing, again, your title company to hold your money and hold possession of your property so that they can legally and fairly distribute it, give it back to whoever it's owed to. That's essentially escrow. And do y'all have anything to add on that?
Dude, I can explain this perfect. I just realized that I know what this is.
Okay.
So in the crime underworld, which I know about, but if you're a mob boss and you're a mob boss, and let's say you have a stolen boat and you have $500,000 and you want to sell it, right, and trade, you guys can hire me, and I will make sure that the money gets to you, and if either of you fail, I'll just kill the one that failed. Actually, I kill both of you.
That's where we get an insurance.
That's the rule. And so that's what it is. I hold the power. And so you know that you're going to get your money. You know that you're going to get your boat. And if it falls through, it sucks for everybody. Right? That's my job. And so I guess that's what I hold everybody's money. And as long as everything goes smoothly, I give the money to everybody who needs it, and the things to everybody who needs it, as long as all those conditions are met. And then if it doesn't, then everybody's day.
Everybody sat down and agreed to on a shipping dock.
That's the most gruesome.
That this is going to happen.
Yeah.
Which is right. Which is where he's talking about, insurance. If somebody doesn't follow through, then they offer the title insurance. Which, Jeremy, can you kind of elaborate on that?
Well, back to the mob boss analogy. So
It's funny
you're
because
the guy that makes sure that the money gets exchanged, right? But you're also ensuring that there's no problems that are going to come about with the title to the property.
everybody plays nice.
Because if there is, we're going to come back and we're going to kill you.
Yeah.
Which essentially, so title insurance, title companies providing insurance that
the title company.
the transaction is handled properly, legally. There's a clean transfer ownership. There's no junk liens or funkiness that will follow that title going forward. And if there is an issue that were to arise later down the line, that insurance they provide covers that. It's
Well, that-
time-
I do
Like
that.
for
That happens
example,
to me.
yeah, like for example, if you know, you had a house and somehow it slipped by and your great grandpa had owned had somebody work on the house way back when and they had a lien on it. They insure your house so that company can't come back and be like, wait a minute, they see something happen. They can't come back and be like, wait a minute, we want this house because, you know, back in the day, they owed us money, right?
Yeah, another one I use is grandma and grandpa live, grandma dies, grandpa dies, and there's a child left to sell that property. They
Okay.
sell it, but then another child from a prior marriage comes along. Grandma, I'm your half brother, half sister. I had a conflict into that. Well, I should have got my cut. Now now they may sue the title insurance company because of that. I mean, that's one analogy.
No, I like, yeah, that makes it a
And
little bit more clear.
Those things are very rare. They happen. Title insurance, title agent could talk about how much they pay out in claims annually, and I'm sure it's a lot because things do happen. But banks require it, and the only way around it typically is if you've got cash money.
Cash,
And
yeah.
I have no time for cash buyers. Because I mean,
I've got all the time for cash buys. I've got all the time for cash buys. See, that's how, isn't it, like, we all have these like these differing rules. He's like, don't bring me no cash buys.
no, I
All right. So that's a bit in the title. I have a sheet here that kind of shows you your title fees as a buyer, you know, and there you can see it's a list of just, you know, overnight delivery fees and you know, mortgage T3-6 endorsements. So like these are all papers that a manager's pushing, and you end up spending about $2,000, I think, for the actual title. You know, $1,500. It'll vary. All right. Brings us to auction and inspection. My man, Gentry Giles.
You got it.
Step-by-step,
You
I'm
get it,
gonna
man.
it right.
Now we're friends.
Okay, so
Yeah.
right here we got possible inspections. When does this typically happen and why? We're just coming off of me getting the 1 to 4 family. In there, which I didn't go over, but in there is a section that says how much they're paying for your auction period, and how long it's going to be. Your auction period, which I'll go ahead and let Gentry explain your.
I explain this all the
Yeah,
time, so it's
give
easy.
you the auction period.
So most of the time people shop for houses, they go look how cute it is. Are we going to fit our furniture? Can our future family fit here? Is it small enough if they're retiring, they're trying to downsize? So you go and you kind of get a feel for what you want. And then you make sure it's good enough to live in. So, you know, it was the right color, it was the right shape, it was the right rooms and size, but you didn't get to test everything, make sure it all works. Because obviously it's cute enough, but we want to make sure it's actually going to work once you move in. So you get option time and the option is essentially to change the house or not buy it. So that's what an option period is. And the only way you can find out if that's needed is to look at it. And if you're going to look at it yourself and you know what you're talking about, that's fine. But I am basically a teacher. I am a private teacher, a professor, where I go in and I become an expert on this property in a matter of 2, 3, 4 hours. And then you come for about a 30, 45-minute lecture, and I tell you everything you need to know about this place. And it could be good, it could be bad, and I'm completely impartial. I do not care if it works. I do not care if it doesn't. Some people want fixer-uppers. Some people I say this, and this is wrong, and they're like, yes, we got things to do. And some people, you know, there's one scratch in the wall and they're out. So I do not care if something's broken or if something's improper, and I don't actually say this is bad. I just say this is what this is and what it means and why it's wrong, and you can take that however you want. And so I gather all that information. I test everything from the roof to the foundation, except accessories. So I'm not going to look at your satellite dish. I can only look, or the solar panels, for instance, but I can look at maybe how those solar panels are affecting the roof. So I can say, well, I don't inspect solar panels, but the roof is sagging because they're too heavy. So I can only tell you how it's affecting it. And that comes in the form of writing and spoken word. And it's super easy to get one. You just tell me when you want me there. And I coordinate everything with the seller. I give you one paper to sign and you can pay in multiple ways. And then on that day and time, you come and you learn about the house. And that's the time that you gather that information. You're understanding the consequences of what I found, if anything. And then you're able to take those options if necessary. We want to alter the home or we want to leave the contract. And the alterations go back to your agent where they say, hey, our inspector said this. We want that changed. So agent, tell them we want this changed in this way. And so I'm just a consultant. I'm just a hired teacher, and I work for whoever paid me to do the inspection. So if it's the seller, I work for them. I do the exact same thing. If it's the buyer, I do it for them. Exact same product. It does not change.
All right. So you can see the importance of this. Like he goes in and goes in and really looks at what structurally could be wrong with your house beyond that. In this climate, in this market, the auction period has become uber important, both as a negotiation tool and very, very much so as like a singular negotiation tool, because we've got a seller's market. We've got agents that are going into houses and where a 10-day option period was normal for $100. So somebody paid $10 a day to rent your house essentially and have somebody go and look at everything. Now the market has decided that $100 for somebody to be able to go in, look at your house, and then jump out, and you have to list it again, is worth more than $100. And so like I said, online, you pick the days, you pick the time, you pick the price, and he does it, and that, like I said, is a negotiation piece when we get into that, and when we get past a market or a basics class, we can go into that, because that's you could really go on about the option period and how important it is.
You said possible inspections.
Yeah.
Sellers can get them even before. Anyone can hire me. You don't have to be buying a house, selling a house. You can just, if you live somewhere, I can come look at your house and tell you what I think. But sellers can get these so that they're not surprised by things when they come out. Because what happens is, this happened to a house in Panhandle. I went 4 times for different buyers. And what was bizarre was it was the exact same every time I went. And it was massive issues that no one was going to buy this house for, but the sellers wouldn't fix them. And so just over and over, I was back at this house. And if they had gotten an inspection prior to any of those buyers coming and looking, they may have had the chance to fix them or finish the work they were doing, so that they were prepared for that onslaught or that just extended time. So I can work for sellers too, so that they're not confused or surprised by buyers asking for things. And in their disclosure, they can say, hey, we know these things are here and we're not going to fix them. We just know that they're here, and we can say that ahead of time, or this is how we'll work through it. And so it just kind of dissolves some of the mystery and the tension, and it makes negotiations a forward movement instead of just, an unstoppable force meeting an immovable object.
Right.
It helps things move smoother.
And on that point, I had a house that same thing was getting pegged for every inspection. I was just at a loss. It was stressing me out. It was one of my first houses, and so it was all of my money. and luckily I had Adrian, mentor, and he told me, he said, hey, put that, if you got the inspection, put it on MLS. He said, so that way, he's like, you've got your buyers or prospective buyers know what's wrong with it before they even go look. And so that qualifies them, but before they waste anybody's time. And so, yeah, inspections are very important just to know what you got. And possible inspections, like you said, you don't have to. I was telling about a negotiation piece. There's agents that aren't going in on inspection, or auction, which is insane. If it's a newer house, but it's yeah. Well, he's like, yeah. Okay, so let's move on beyond that. Like we'll get deep in it. The repairs addendum and negotiations. What would you say? How would you say that you benefit the negotiations and repairs aspect? And I'll kind of go and elaborate on what that is.
In two ways. So obviously in negotiations, as far as what information you have in your hands, and you can position yourself as either being generous or being picky. And so depending on how you want to negotiate the deal, you can say, hey, look, our inspectors found 20 of these things, but 19 of them were really small, kind of petty, but one of them is a big deal. So we really just only want you to take care of the one thing, and we will take care of all other things.
Yeah.
And then the seller goes, oh, they're kind of being a little bit generous. They're really just picking one thing. So there's the way you position yourself in that negotiation. Then secondarily, or maybe even primarily, if you're actually going to buy the house, you actually want to know what it's like to live there. And so I essentially live in the house really hard for 3 hours. Like that's what I do. And if something's wrong and needs repair and you didn't know when you moved in, you're on the hook for, possibly tens of thousands of dollars worth of something that needed to be taken care of. And if you had no inspection or a bad inspector, you didn't know, then you're on the hook for that. And it's too bad for you. You should have hired a good inspector or hired one, period. And so, there are things as far as possible inspections, the basic inspection that's governed by my license, but then there's things that I do on top of that. For instance, the sewer cameras.
Yeah.
Holy cow. Talk about $30,000 worth of needed repairs under a house. And they had no idea. Even the sellers didn't know,
Right.
And then you find this basically an underground lake under their house. And you're like, I don't know what to tell you, but you're sitting on a lake, and it's a picture of like frogs and like stuff. And you're like, look, and, but even the sellers didn't know, but now they know. And so things can move forward instead of being a surprise. But if the buyers hadn't got that inspection, they would move in and, a year later they'd been, what's that? So,
Oh yeah.
it's important. And it's something that can benefit everybody in the transaction if you do it right.
Yeah. Again, I can't I can't speak highly enough about doing an option period just because it's so much, it's protection. It's like insurance. Which, next, after you're in your option period, you get all your inspections, you're going to like you said, tell your agent what you just can't live with. And then we've got a repair addendum, which, I should have printed that one out since we're going to have this, but it has what you want. What's a box to list the things that you just couldn't live with, and then kind of what you want done. Do you want money on top of your mortgage or taken off the list price? Do you want money on top of your closing prices? What do you want? And then again, that's for negotiations. You'll get probably a counter back, and y'all will have to work with something, especially to get the ball rolling. If there's something you can't live with, then you forfeit your option money, and you're either on to the next, or whatever choice you make as a buyer. Okay. Now, last but not least, Miss Lisa Link from Goosehead. Okay, so I put you last because I'm not quite sure where in the process insurance starts. So could you help me out with that one?
So it starts after a house goes under contract with a realtor. That's
Okay.
a good time to start it.
Right.
But I don't really matter until you've been pre-approved, you've had your inspections, you're really gonna buy this house, then that's where we come in. So when you're ready to buy a house, you would call me. I'm an insurance agent. We do home, auto, boat, motorcycle, anything that you want. So in this room for me right now, there are 13 opportunities because everybody has to have insurance, right? So for us, when you're buying a home, you would call us. We would ask you some questions. Something that people don't realize, and I explained this 3 times yesterday to people from other states. In the state of Texas, your insurance rate is set on your insurance score, which is also connected to your credit score. So your insurance agent, if they're really going to give you a good, true quote, they're going to ask you for your date of birth and your social security number. Then we are a broker, an insurance broker. So we're an independent agent. So we represent 25 different companies. So when we run a quote for you, we're actually in essence doing the shopping for you. So you don't have to sit there and call 25 agents or 25 different companies. We do all of that for you with our system. So some questions that you're going to want to know about, and a lot of it is going to be from the inspection. You're going to know because you're going to have had a conversation with your inspection person, but we're going to care about what the roof looks like on your new house. We're going to want to know how old it is, what kind it is, has it been looked at, what did the inspector say? The inspector, he just said that they check for livability. They want to make sure that you're safe in your home. I'm probably going to send a roofer out to check for insurability because we want a roofer to say, yes, this roof is good, or no, this roof needs to be replaced, repaired, whatever. So that's our first challenge. Then we want to know about electrical, plumbing, heating and air conditioning, and the hot water heater. So when we do a quote, we need to know kind of about the bones of a house. So if it's a new house, all of that stuff's going to be good. If it's an old house, we're going to have to do some digging. So we're really good friends with the City of Amarillo's permits department. They help us out a lot. We call them and say, hey, here's this house built in the 1960s. How many permits have been pulled? What kind of permits? They kind of help us figure out what has happened in the house. And we want to make sure that it's insurable. Okay. So we also ask questions like, do you have any kids? Kids matter. Little kids don't matter as much as teenage kids that you might leave home alone and might have a fire or a party and someone falls on the floor jumping off the table and hit their head and want to sue you. So we want to know about your kids. We want to know if you have a trampoline. If you have kids, a lot of times people will have a trampoline. We want to know about that. It has to be netted and it has to be tied down. Having it buried really, really is a good thing also, but at least tied down and netted. Netted to keep your kids on the trampoline, tied down so the Texas wind doesn't take it and blow it into your neighbor's yard. Okay. The third thing is pools or hot tubs. You can have a pool, you can have a hot tub. The pool shouldn't have a slide or a diving board. No insurance company wants that. And it should be fenced. We don't want the neighbor's kids coming over and getting in your pool. Okay. So it's got to be fenced. The last thing is dogs. We love dogs. We don't like aggressive dogs. If you've got a German Shepherd or a Doberman or a Pit Bull, we're probably not going to insure the liability attached to that dog. If he bites someone, you're on your own. We don't want that. So if you have a little dachshund like Rigo has, I'm good. A Yorkie, I'm good. Anything like that, we're good. But those things do matter. So your insurance agent will be asking questions about the house and then about you as far as like who you are, what's going on in your house. So then we're going to get you a quote. We're going to work with your lender to make sure that that we're in line with where you need to be, because insurance and taxes affect your house payment. Those two things are escrowed. There's the escrow word. They're escrowed into your escrow account. So in the beginning, when you buy a home, you're going to pay the insurance at closing but your lender is going to set it up to where you pay the next year per month as you go for the next year. So at the end of the next year, they're gonna have the money to pay your insurance. Your new lender will pay your insurance and your taxes for you, because they want to make sure that we're all protecting their investment. While it is your home, until you pay it off, it really still belongs to the bank, right? So they want to make sure that they're protected, and that's where we help you do that. Okay.
Yeah, all right, thank you. Okay, so what would you say is the most important part when choosing the policy?
So also in the state of Texas, that isn't normal for like Californians, Coloradoans, anyone moving here. In the state of Texas, we have 4 water coverages that are really, really important, and you want to make sure you have those on your own policy. So we'll walk you through that. So we have sudden accidental, which is like if your water hose or your washing machine hose comes undone, or your hot water heater springs a leak and floods a room, that's considered sudden accidental. So we want to make sure you have that. We have foundation coverage, which is any kind of pipe breakage under your foundation. We want to make sure you're covered for that. Okay, last March when we had that hard freeze, people in new homes, old homes, it didn't matter. Their pipes were freezing and bursting, and we had to help them. Okay, then you have backup and overflow. These lovely kids that we all have that stuff stuff down the toilet. It backs up, ruins your carpet or whatever. You've got backup and overflow. And then you have seepage and leakage, which is the slow leaking of water behind the wall. So that's usually a shower pan. A good example of that is a shower pan tilting. Water's running behind the wall and you don't know it until it comes out on the other side of the wall. The floor is wet. And you're like, oh, I have a problem. And then we dig into it. You're shaking your head. You don't live looking at me. So you want to make sure that you have an agent that's looking out for you, that's going to have all the coverages on your policy that you need in case something happens. And a lot of people, some of these policies, some of these coverages are not expensive, but when you're on a budget, people will look to cut some of those. And then when something happens, they either weren't advised, well, look, this coverage is only $35 a year. Don't cut that, keep that, because you're going to want, I don't want to be the agent that you call that I have to say, oh, I'm sorry, you don't have that coverage. I don't like to do that. So we make sure we sell on coverage. I want to take care of you. Okay. So that's one of the things that you're going to want to look for. You're going to look for an agent that's going to care and be looking ahead for you of what could happen. We also have a really great coverage called service line coverage, which covers all your pipes, underground utilities from the house to the alley. So you want to be sure that you have someone that can sell you that and that they advise you to get that. Because I had a lady who bought her home. It's $35 for this coverage, and she was one of the people that was very budget conscious. And she said, I don't think I need that. People have been living in this house. It's kind of funny. People come up with, they justify anything. People have been living in this house. They haven't had any trouble. I think I'm okay. Let's take off $35. Okay, I'm going to do what you want me to do against what I've advised you. Okay. So she moves in, and literally a week later, her water line in the backyard burst, and it was $5,500. And she called me and she said, I'm calling to tell you that you were right, that I should have had the $3,500 or the $35 endorsement on there, because it ended up costing her, she had a
5 years of that coverage.
Yeah. So her deductible was $2,500.
Or no more than that.
So she
Yeah.
paid her deductible, and then the company would have paid the rest. But since she didn't have it, she paid all of that out of her own pocket. So, yeah.
All right.
So just got to have an agent that's looking out for you.
Yeah.
Not all about the money. It's never about the money.
I mean, that's almost that everybody up here, it's about the agent, what the agent is willing to take out of their time to teach you. And like she said, we're just fiduciaries that are here to give you the best advice from our experience and from our knowledge. And in the long run, yes, we've got to do what you've said and what you've asked. But if you've got a good and experienced agent that takes their time to learn what's happening, like you said, forward, you're going to be a lot safer in the long run.
Okay, and the last one, how can our clients get more out of their insurance?
So So again, I think it just goes back to being educated and knowing what you're supposed to have. Talk to your agent, even if it's not me, which all of y'all, none of y'all are with me. So we need to change
But
that.
my wife and I are going to be,
Okay, thank you. But be good friends with your agent, like call your agent, you know, get to know what's on your policy, ask the questions, make sure you have the right coverage. There's a little saying that says insurance is worthless, right? Because it's like the necessary evil. Everybody, I would rather spend my money somewhere else than paying for insurance. But insurance is worthless until you need it, and then it's priceless. And so there's a lot of truth to that. And that's just kind of how I think that's an important way to
Well,
look at
yeah.
insurance.
that's true. And like she says, make sure you're covered, but also use your coverage.
Mhm.
Use your coverage.
Yeah.
If something happens, call
Well,
on it,
and you
use
have
it.
to be smart about it. You have to,
Yeah.
that's another thing your agent should help you with,
Yeah.
because I have some people that they'll come home from being gone all weekend and there's water in their dining room and it's been flooding all weekend, and they panic and they call me and they say, okay, I need to file a claim. I need to file a water claim. You know, I need to go to the hotel. And I always say, calm down, because a water claim, if you file a water claim, it will stay with you and the house for 5 years. If you decide you're going to move to a different house, that water claim is going to follow you and it's going to affect your home insurance for 5 years. It stays with you and the house. So when this happened, I have a good example of that happening. And I said, listen, you need to clean up the water, of course. You don't want to cause any more damage. Clean up the water, call your plumber. Let's see what he says. Well, it was just a little drain that had, from the washing machine, the wife had left the left the washer going when they left. She thought, oh great, I'll have this laundry done when I get back. And while they were gone for the day, the water just went all over the house. It was a loose, they had just moved in, right? Because it's a new house, they just moved in. It was the drainage hose wasn't connected correctly on the washer. And it was just a matter of getting a better hose, getting someone to get back there, and her husband could have done it. But she called the plumber, got a better hose, got a better connection, and that was done. We didn't need to file a water claim, cause them these great increases when it was just a little fix. But you don't know that unless you get back there and you look at it, or you call a plumber and they can help. So
Right.
you need an insurance agent that can guide you and say, no, let's not panic. Let's not file a claim yet. Let's see if we can figure it out ourselves, because you have that deductible that you have to meet at first. And those are expensive too. A 1% deductible on a $200,000 house, $2,000. Let's just see if we can figure out another way to fix it before we just panic and file a claim. I also had another funny claim that I wanted, that I
Go ahead, go ahead.
as an insurance agent, you get calls from people all the time with scenarios. Like I had a guy call me this week, hey, I have to tell you that I hit 3 people, and how did that happen? Well, it was, early in the morning. I already know where this is headed. Early in the morning, as in 2 a.m. leaving the bar. I might have been a little drunk. Okay, great. But so I have this one claim where we had a home where the husband and wife are getting a divorce, and she had X amount of time to get out of the house, and she vacated the home like she was supposed to. The husband had a new girlfriend already, and she vacated their home. And he comes home and he's like, okay, the house is cleaned out. She's gone. Thank God she's gone. And all of a sudden the smell starts, a couple of days go by and the smell just starts to smell, and a couple more days go by and the smell gets stronger and he can't figure out what's going on. And yes, the house was empty. She had taken everything out of the house, but she had stuffed they had really fancy cornice boards, like above window treatments. And she had taken the curtain rod in every single window in the house and stuffed sardines in it. And this smell was horrible.
It's genius.
Horrible.
I gotta give him credit.
Inspector.
It
She was
was
thinking.
Smart.
And the guy, brings his new girl. They're gonna try to live in this house, and this smell
No,
just won't go
no.
away. And So they filed a claim because we had to get the smell out. And it was,
That's
they
rough.
lived with that
should
for
think
a
of
couple of weeks. I know, right? Who would ever
Who would
think?
think of?
You have to be really jaded. and
Oh
really
my
hurt.
God. Just thinking.
But anyway, this group over here, they're like.
Yeah, all of them like, shoot. I'm like, I've been thinking about that.
She's. She didn't come up with that one off the cuff.
That's.
Right now.
Again, when you have a claim, line like Jeremy, I'm gonna say, shop local, don't go online and get Geico, blah, blah, blah. They're great, yes, price wise, I guess, I don't even know. But when you have something go wrong in your home or your car, or something happens that you didn't expect, you want to have a local agent that you can call or come and see and say, hey, walk me through this, help me with this.
That knows your house, and knows you, and knows your family.
Yeah.
So I changed my statement. Use your agent. Use your agent.
Yeah, there you go.
If you got insurance, you got a lender, you got an inspector, use your agent. All right. So I think that brings us on to our special thanks. Do I? And I didn't put Emily in there because I didn't realize she was gonna be here, but to help, but I want to thank my wife, Kat Rosa. She's an event coordinator, and she put all this together on a quick and easy budget. And then of course Taylor Wright, my administrative assistant. She's really helped fill in, and this stuff wouldn't have been done by me. And like, if you go through here and look at these, you've got resources. I mean, even anybody in the business, you got resources with this. Tell about Keller Williams belief system, which is like, I would say that most of the people that I know that I deal with live by the system. Win-win, integrity, customers always come first, commitment on all things, communication, seek first to understand, creativity, ideas before results, teamwork, trust, success. All things I believe in. My card's in there, and again, so many resources. And then, of course, my coach, Adrian Ferris. I wouldn't be here without him. Yeah, I wouldn't be in this spot. So yeah, and then and thanks everybody, and thanks for the sponsors. I'm gonna have future events. I don't know if any of y'all know me or y'all been on my Facebook. I don't take breaks. I don't stop. I keep going. And so as you can see, next year we've already got CTC planned out. Invite a friend, invite 2 friends to come for the next one, because it's probably gonna be a little bit like this, but we're just gonna have more bodies in it. Yeah. And I don't ever do the same thing twice, so it's gonna be better. But in December, I'm gonna have a happy hour. I want to meet, this year.
Yeah.
Oh, I'm sorry, 2021. Where are you at? I'm just kidding. But December 2021, I'm gonna have a happy hour. The time and place are tentative, but they will be out, and I'll be getting them, and it's a limited event. So the folks in this room are pre-invited, and then the folks not in this room are gonna have to work real hard to get invited. And then
No cost.
In spring, I'm gonna have, it says a market update. I'm probably gonna have something a little like this. Maybe, I don't know if it's gonna be this large, probably something a little small batch, just like the happy hour, food and drink maybe, and then just to have a market update, because it's going to change drastically by March. And then of course in June, I'm gonna have a barbecue, and it's gonna be a big event. So look forward to summertime, and then of course next year. If you want information like this, more of this information, you want to get connected, you didn't get connected today with somebody, get connected with me. I'm on Facebook, Instagram, and YouTube, Twitter, LinkedIn,
Discord, anywhere you can reach somebody, Zoom. And most of that's at Mr. Stephen Rosas. You can find me business-wise at the Realtor Stephen Rosas. And of course, my brokerage, Keller Williams. I really appreciate everybody showing up and coming out. That's the show. Oh, wait. Prizes. And